like anytime it starts to get a little bumpy, I get excited, right? I always believe that there's opportunity in every market. And,
Yeah.
I'm thinking, gosh, what can I do to roll up my sleeves and get to work to help people?
Welcome everybody to another Mortgage Minute. So if you're new to this show or if you've been with us the whole time, you should know that this show is not really about interest rates. Our focus is helping potential homebuyers understand the mortgage world as it pertains to buying a home. And so therefore we focus on data over drama, facts over feelings, if you will. And our goal is to provide education about the home buying process, both from a real estate and mortgage loan perspective, while providing you with the truth about these markets. So who are we to offer such advice? Well, my name is Matt Thomas. I'm a local realtor, have been for almost 14 years. And my co-host is Brian Dewald, a highly acclaimed local mortgage lender in his 20th year. And both of us serve the Denver metro area and the surrounding areas. So today we're not only going to update you on market conditions, but we're also going to talk about some viable solutions that we're working on to help homebuyers and sellers navigate today's market. So one thing that I've always appreciated about this industry is the level of innovation and creativity. When things get tough, we have mortgage professionals, real estate professionals who figure out ways to come up with solutions to help home buyers and a lot of times helps home sellers. Even though the interest rates are high, it crosses both paths, obviously. So, Brian, why don't you tell us what's going on? Let's start with the market update, and then we'll talk about some of those solutions that you guys have come up with.
Yeah, sounds like a great plan. I wanted to start just by, kind of picking on the Fed. We've done that quite a bit on this show. And, the thing that really stinks about the Fed is that they just miss the mark, right? Like they're attorneys, not necessarily economists a lot of the time. And to boot, there's a lot of people that are involved in the Fed that have opposing ideas and opinions a lot of times. So anyway, not to back too hard on that piece, but they're just kind of missing the mark. They have for a long time. We're looking at 20 some year high, 23-year high, I think I saw recently for mortgage rates. The last 10 or 12 days has been really bumpy in terms of mortgage prices. We've seen a couple of nice rebounds in there, and some pretty brutal days in there as well. A lot of it just has to come down to data, really, is what we're looking at. And the super frustrating thing, and this is what's wrong with the Fed, is that they're looking at data that seems to oppose itself from time to time. So I'll give you an example.
Yeah.
There are, reports that are coming out that says unemployment. By the way, unemployment has a lot of weight when it comes to Fed decisions because it's really the last shoe to drop when they're looking at everything else, right? Like if they look at their, CPI and PCE and all of these other things, they're saying, wait a minute, inflation is still pretty high. And we feel that, right? When we go to the gas pump or the grocery store, of course. But they're moving their rates based on those factors among and others. So, one of the things that has a ton of weight to it and why they think that rates still need to be inflated and high is employment data or unemployment data or both. And the thing that gets super frustrating is that we keep seeing these reports and this data come out and it's conflicting of one another, right? Like there's, the job reports and there's so many new jobs coming out, but a big chunk of the new jobs that are coming out is the one person working two jobs. Like that shouldn't count.
Yeah.
The people on strike, like all of these things. And we would combine that with where, things have been bumpy in the last couple of weeks. I just mentioned folks being on strike. That's not helping markets at all. When we look at, the potential for government shutdown and a second potential shutdown and ousting the Speaker of the House. Like there's all of these bumpy things right now that are just freaking out markets. So, to that tune, that's kind of what we've seen over the last couple of weeks. So my hope is, and I know this sounds terrible, but if the employment data really starts to go downhill, it's really going to help things out from an interest rate environment. Like I said, it's kind of the last shoe to drop when we start looking at information that pertains to recession. So again, nobody wants that, but when it pertains to real estate and mortgage rates, historically, both do really well during recession.
Well, not only historically, but that is what Jerome Powell actually said at the very beginning of this. He said, that there needs to be some pain felt by the American population. And,
Yep.
When it comes to jobs, that would certainly be part of it. So that is definitely some unfortunate news for obviously folks that are, that are impacted directly by that. But it would certainly cause interest rates to well, we believe it would cause interest rates to come down, and that's what it's always been. Like you said, it's historically, and probably see a lot more people, who have been on the proverbial fence, waiting to figure out when the absolute best time is to buy a home. Maybe get off that fence and take advantage of rates that might be going down. But yeah, in the meantime, things have been, as you said, bumpy, and that's just being us being real. Like that's what we've always talked about on the show. So the good news is, I mean, I still have business, you still have business. Business has been impacted, but there are people that are finding ways to buy, and there are always people that need to sell. And so things move on. What we'd like it to be is for there to be more advantages for more people at this time, obviously. So again, as I alluded to at the beginning, one thing since I've been in this business, I've really been impressed with, just the level of creativity when there's a sort of an issue that comes up, whether it's with the economy or the way that real estate is functioning, or, the recession and all the things that we've gone through in the last, since I've been in real estate. There seems to always be, this entrepreneurial spirit where everyone says, look, let's figure out a way that we can help more people. And so, Brian, you've recently, and I think we talked about this last time we met, you've actually started your own company, which gives you a lot of leeway. Congratulations, by the way. That's very audacious of you, and it's very courageous of you to be able to do that, in this type of market. But the advantage to the people that we work with is some programs that you're able to offer that maybe you weren't able to give when you're with your prior company. You want to tell us
Yeah.
about those?
Yeah. So, when you mentioned the entrepreneurial spirit, like anytime it starts to get a little bumpy, I get excited, right? I always believe that there's opportunity in every market. And,
Yeah.
I'm thinking, gosh, what can I do to roll up my sleeves and get to work to help people? So we've come up with a program. There's been a lot of talk over the last year or so about a temporary buy down, a 3-2-1 buy down, or a 2-1 buy down, or a 1-0 buy down. And what we've come up with recently, and this takes a little bit more to explain. So anybody that's watching, I'd love to have a conversation to kind of fill you in with some detail because we don't have enough time here to
Well,
do.
and actually, our last video, it's sort of self promotion, but our last video we did was very well received. It was
That's right.
watched by more people than a lot of the other videos we've done, and it goes into depth about the 2-1 buy down. You're going
Yep.
to tell us about a different buy down, but the principles are probably the same, I assume, right? So we can
Exactly the
refer
same.
back to that for a full explanation.
Yep, exactly the same. Yep, go back and watch that other video. I'd forgotten we'd done that, so thanks for the plug.
Yep.
But anyway, so what I've rolled out, this will work not for every loan, but a vast majority of loans moving forward. Today is October 5th, so moving forward, we're going to offer these up at least through the end of the year. What we're doing is offering a free 1-0 buy down, meaning no cost to the buyer, no cost to the seller. It's just a way for us to compete to help bridge the gap between now and what we feel like is going to be potentially lower interest rates down the road. The other
Tell us
thing
what
is
1-0 means.
1-0 means, so let's say in a instance where rates are at 7.5. We qualify at 7.5. The loan is booked at 7.5, but for the first year, buyers would make payments at 6.5 instead of 7.5. So, depending on the loan size, that can be a tremendous savings, $300-400 a month, which could be huge. So really excited about that. We've also got a program with some grant money for folks that qualify for that. It's a little tough to qualify for, but we've got up to $4,000 to help folks bridge the gap between closing costs and or down payment, which is super cool. So again, very much detail there, but we'd have to get into a personal conversation to share those. But the other thing I wanted to mention too is, when we talk about bridging this gap between, current prices and lower prices, and lower interest rates rather, there was a really interesting show. We may have to go find it and maybe we can post the link in here. But Barbara Corcoran, who's she was on Shark Tank. She's a big time, New York City real estate investor and professional.
Runs the Corcoran Group, yeah, which is a big real estate company in New York. Yep.
She was on as one of the morning shows on television. It was just this week, and she expects prices to be up anywhere between 10 and 15% over the next few years. So I did some math on that based on a $500,000 sales price, right? With I believe it was 5% down. If we get to the point where the prices go up another 5%, but rates are at 5%, it's about a $60 difference in payment in their favor. Financing more at a lower sales price. You still get a little bit lower payment. However, if we buy now at the higher rate and then refi, if rates get back down there, since we're buying at the lower amount, it's about a $300 difference in their favor to do it now. So anyway, can certainly spend some time with anybody and go over the exact numbers and math. But
Interesting. Real quick, can we dive into that just for just a brief
yeah,
second? What did she attribute that to? She thinks that that prices will go up 10 to 15% over the next few years. That would, in theory, that would probably allude to the rates going down because things right now affordability is what's top of mind for a lot of people and very real.
yeah.
So what did she attribute
Yeah.
that
Rates,
projected increase to?
recession, yeah, a lot of those things that we've, kind of heard about and talked about for a little while is just everything, once the dust starts to settle with this wacky economy, we feel like rates are going to come back down into the fives.
Okay. Very good. Now, Brian, you mentioned also you've got one other program. Did you want to talk about that? You've got one other program for some folks that maybe a little less qualified, but they could maybe have some help
Yeah. So there's a neat
with a
program out there.
grant type of a program.
Yeah. There's some certain income requirements, some limits and things like this, but there's some really cool things that I've just sort of uncovered and rolled out to our buyers that for first timers, there's some really attractive things that are on the table. For instance, loan level price adjustments get waived for first time home buyers. So, if you've got a shaky credit, on conventional loans, these type of adjustments will go away. It's super cool. There's income limits. Like I said, we've got to be under there. And in some cases, there's going to be some folks that can benefit from an extra $4,000 really in kind of free money. It's a grant. There's no real strings attached to it. Like I said, you do have to qualify and there's some limits to it. But it's a really cool way to help folks kind of bridge again. And what's interesting about this, it's not a closing cost grant. It can be used for down payment, which is super not common, if that makes sense. So anyway,
Yeah,
yeah,
absolutely.
figure out some new.
Well, and again, to reiterate, like a grant is obviously something you don't have to pay back. So that's somebody contributing $4,000 towards
Yep,
your overall picture to be able to buy a house, and you can use it how you want to, either as closing costs or down payment.
correct,
Yeah,
correct.
that's phenomenal.
Yeah, it's fun.
Well, very good. Well, if those don't offer some options for you that seem to make sense, we'd love for you to give us a call. That's the point of us, having this show is to be able to help people understand that we are here to help and find solutions to the home buying and the home loan process. And so, obviously, for home loans, we would ask you to reach out to Brian for the home buying process. Reach out to myself, and we will get you connected and pointed in the right direction to be able to figure out how to buy in today's economy, in today's world, with the rates and the prices and everything being what they are. Again, there are people moving forward, and so it's partly because people like ourselves are finding solutions to be able to help people understand where the advantages are, even in this market. So we look forward to hearing from you and connecting with you to be able to help. Brian, is there anything else you want to bring forward?
I think that's it for now.
Great. Well, I think that's very, very good information to pass along. And yeah, we're here. If you need to reach us, please look for our information in the description below. Talk soon, everybody. We'll see you.